channel. This is the Peter Lynch universe. This is a group of 35 stocks put together by YCharts. They screen for stocks that are small cap, have a low PEG ratio, a reasonable debt to equity ratio, and something of a dividend to come up with this list of like Peter Lynch like stocks. I've done a bunch of videos on some of the other names in this list, but you know, it changes every once in a while, and here's an update for you guys who have subscribed. Yeah, this name right here is a new entry. It's called, I might be saying this wrong, Sabine or Sabine Royalty Trust. I'm going to go with Sabine Royalty Trust. SBR is the ticker symbol. Just do your own due diligence here. This is not a recommendation. Yeah, this is just me taking a look at some of the names on this list. So yeah, if you're thinking of investing in it, make sure you do some due diligence. This is a quick overview. YCharts give it a rating of attractive, a value score of 9 out of 10, fundamental score of 7 out of 10, and historical multiple valuation positive, so meaning it's kind of undervalued by 44.1%. It says here that Sabine or Sabine Royalty Trust is an express trust, which is formed to receive Sabine Corporation's royalty and mineral interest, including landowners' royalties, overriding royalty interest, mineral production payments, and any other non-participatory interest in certain royalty properties. The trusts producing and proved undeveloped oil and gas royalty properties are located in Florida, Louisiana, Mississippi, New Mexico, Oklahoma, and Texas. So it is an energy-related trust, meaning that they're getting some kickbacks from probably all the E&P companies located in these various locations who are probably drilling for oil and gas. And sounding like a bit of a broken record here, but a lot of these energy names have been popping up on the list lately, simply because the prices of oil and gas have gone up considerably. Not just oil and gas, but a lot of the fossil fuels, coal too. I've seen a lot with coal as well. But they're doing really well. Their balance sheets are improving, and they're making money. And you know, if you're a believer, kind of like I am, that you know, inflation isn't going to go away anytime soon, and certainly the demand for fossil fuels isn't going to be going away anytime soon either. This is a really good place to be, simply because Wall Street and you know, society in general just despises fossil fuels. So there's been a lot of underinvestment, a lot of capital taken out of these companies, which means that there's some real bargains there. So yeah, check some of these out. I know I'll probably put this on my watch list and maybe do another video on it just to see what the deal is, because I can even see here right away that yeah, it has a market cap of $1 billion, but the dividend the dividend yield is 11.26%, which is pretty high. And this is not uncommon for a lot of these kind of energy royalty trust names, and you know, actually oil and gas producers. There's a few names out there where their dividend yields are quite high, and their balance sheets are really good. They're buying back shares, and yeah, they just have more cash than they know what to do with, so their dividends are kind of going up. So whether or not that's maintainable is another question. Nobody can really predict the future on that, but for the time being, yeah, it seems like it's not a bad place to have a little bit of money in your portfolio. I know I do, that's for sure. So the revenue, 5-year growth, 27.61%. Quarterly revenue year-over-year growth is 42.65%, which is pretty good. EPS diluted 5-year growth is 28.75%. EPS diluted quarterly year-over-year growth is 44.95%. Debt to equity ratio is 0. Return on equity is outstanding, 923.6%. Whoa, that's a lot. The PE ratio is just over 9. No data on insider ownership. Yeah, okay, let's see here some of the key stats. The balance sheet, the cash on hand, yeah, it just has 60 million. Probably, yeah, being a royalty trust, it just like it gets cash and then immediately makes a distribution to shareholders. So cash doesn't really mean very much. The long-term debt is 0. Probably been 0 for a while. Yeah, it definitely has. Shares outstanding, has been buying back any shares, 14.58 million right now. No, pretty steady. The dividend yield, yeah, like I said, it's pretty high, 11.26%. It's pretty good. And let's see here. PEG ratio, very low. So by that metric, this would be like something Peter Lynch might be considered undervalued. 0.08 PEG ratio is pretty low. Yeah, that's Sabine Royalty Trust, SBR. I might have to put this on my watch list. The yields are pretty good, and yeah, like I said, this is a common theme with a lot of like oil and gas companies. It's the reason why Buffett has been buying Chevron and Occidental Petroleums, because yeah, these companies have been uninvested in. Wall Street has been turning their nose up at them and not interested in investing in them whatsoever, even though yeah, they're making lots of money. So there's some real bargains to be had here for investors, little guys like you and me. So yeah, if you're interested in keeping up to date with what's happening with this Peter Lynch universe, make sure you subscribe to the channel. And I'm going to be updating it with more videos like this. Anytime there's a move or a new name in the list here, I will definitely be making a video. You can also go to my website, peterlynchinvestor.com. There's this list there as well, and if you subscribe to the newsletter, you'll be getting updates to what's happening with the Peter Lynch universe as well. And there's also just like other stuff on the website too. So I try to talk a little bit more about some investment strategies and kind of what I've been learning from reading books about investing, not just Peter Lynch but also other names as well. So yeah, if you're interested in getting some summaries of like what I've been up to as far as investing goes, make sure you check it out. Yeah, so that's it for today. Thanks for joining. Bye.